Ok, da Consulenza 2016 siamo con Nick Peters, gestore di Fidelity International, del multi-asset defensive and moderate. So, could you explain us the strategy of the funds that you manage, please? Thank you.
Yeah. So so capital preservation is key. For defensive, we're looking for a cash plus 3% return and a maximum drawdown of 4%. The moderate fund tends to take more risk, and we're looking for a higher return of cash plus 6, but that will lead to, we estimate drawdowns of 6 to 7%. Now, in order to achieve those returns, we have a twin engine approach through market exposure and on the one side, and the second engine are total return strategies, where there's no exposure to the market, and we're looking to generate positive returns from smaller positions. So it's a flexible approach for both funds and well diversified as well.
Okay, so the markets are very complicated and the volatility is high. So the way to get performances right now. So what's the best way to be positioned right now?
So protecting capital is very important when we see the volatility as high as we have done in recent weeks. And we have got a high cash position in order to protect the funds, but also that throws up opportunities. In the moderate fund, where we look to take more risk, we have added 2 equities in recent weeks. And in both funds, we're seeing value at the moment in certain fixed income areas like emerging market local currency, linkers, and global high yield. And so we're building our positions in those 3 areas as we're seeing weakness increase.
So considering the month of January is so complicated, do you think that the rest of 2016 will be, so volatile and difficult like the beginning of the year? Or which are the points that you see the tricky point and the most, complicated points?
Yeah, you're right. We've got substantial headwinds, such as the China slowdown, strong dollar, collapse in oil price, geopolitical risk, and so I find it very difficult to see volatility reducing from the sort of levels that we're seeing. And also, investors have made huge returns from areas such as equities, and so we're looking to take profits. But to my mind, that provides us with opportunities to invest where we're seeing weakness. So we've built up the cash in the fund, and we'll look to use that cash where we see those opportunities, such as high yield, emerging market local currency. And there'll be a time to add to emerging markets as well. They're not cheap enough just yet, but we're certainly reducing our underweight exposure to emerging markets at the moment.
Do you think that institutional investors are taking more risk compared to the past? Maybe they are obliged to. Anyway, you see the behavior of investors are changing?
That's a very interesting question. I think generally institutions look to take advantage where they see price anomalies and where they see value, because they have that longer term investment horizon. So I think they'll be looking to add to risk as they see asset classes correcting, if they have that long-term investment mindset.
Anyway, the multi-asset strategy remains maybe the best way to be invested in.
Yeah, obviously
in a balanced,
Yeah, I'm obviously biased, but what multi-asset provides you with is diversification,
right?
And there's negative correlation between asset classes. So to my mind, that helps protect clients' capital, but also enables us to add to asset classes where we see value and opportunities arise.
Thank you very much.
Thank you.
Thank you.